Alright, so this video is aimed at all those capital investors who have ever considered investing in real estate in Spain. In this video, I'm going to show you how professional real estate investors and real estate investment funds such as invest in the Spanish real estate market in order to maximize the net return of our capital investment. This is Oscar Turegano from Emerging Investors Spain, where we offer immigration, banking, and real estate solutions to non-resident foreign investors in Spain. First of all, I want to emphasize that what I'm going to explain in this video is not an investment advice, but simply a reflection based on our own experience as a real estate investment company in Spain. So when talking about real estate investing, the first thing you have to understand is that good deals are the result of hard work, a wide network of contacts, a proper legal due diligence, an accurate operation structure, and investment performance analysis, and of course, luck. And I say this because many investors come to us asking for 100,000 euros apartments in central areas of Valencia, Barcelona, or Madrid in very good condition with no need of renovation and with a net annual return of above 10%. Believe me when I say that if that asset existed, I would be the first one to buy it. But unfortunately, if you want to invest passively with the lowest risk and highest possible return, buying cheap apartments is not going to get you anywhere. Investing in such assets is risky, very time consuming, and there are already thousands and thousands of local investors competing for them. If you want to be successful investing in real estate in Spain, you have to work on 3 different criteria. The first one is to become a specialist. That basically means focusing on only one type of real estate asset, be it residential apartments, single family home, garages, storage rooms, hotels, land, you name it. The more you specialize, the better results you will get over time. And this is precisely the mistake made by the vast majority of real estate brokers in Spain who want to cover everything. If you try to become an expert on different asset types at the same time, you're not going to do well on any of them. At Emerging Investors Spain, for instance, we specialize in purchasing and renovating small buildings in second-tier tourist cities along the Mediterranean coast and convert them into short-term rental apartment units. The second factor is to be different, which means to try to compete with a smaller group of individuals or companies. If you're looking for 100,000 euros apartments, you will have to compete with thousands of investors who also have that capital available. Therefore, the demand will be higher than the supply and it will be more difficult to find good opportunities since the potential yield will be adjusted to the cap rate. On the other hand, if you're looking for large deals worth tens of millions of euros, you will be competing with large institutional funds that will crush you. Based on my own experience, where we find better opportunities is in sub-institutional deals of 1 to 3 million euros, as they are too big for an individual investor but too small for an institutional fund. And you don't have to pay out all that capital by yourself. You can join forces with other investors, which is precisely what we do at Emerging Investors. We normally operate under a real estate syndication framework. That is, we provide part of the capital necessary to carry out the investment, and the rest is provided by other investors who only provide capital and obtain a return. For them, the investment is totally passive while we take care of absolutely all the management. If you like the idea of investing in our projects in Spain, wait until the end of the video because I will explain you how we invest and how you can join our projects. And the third and probably the most important factor is your network. Unfortunately, this point is crucial if you want to stand out. And in this point, I'm not only referring to having good relationships with brokers that show you with good off-market investment assets, but also having good relationships with banks, lawyers, notaries, construction companies, architects, the public administration. There are many stakeholders that revolve around the real estate transaction itself. And unfortunately, this is the biggest problem faced by foreign investors in Spain. The best thing they can do is to leverage on the network of a local expert. And now that we have talked about the 3 most important criteria to invest in real estate in Spain, I'm going to explain what I think is the best real estate investment strategy, whether you are a local or a foreign investor. This strategy is known as a real estate syndication, although in Spain there is still no such corporate figure, but we operate with a legal operation structure called contrato de cuentas en participación, which ends up being almost the same thing. And how does this strategy work? Well, the corporate structure is divided into two essential figures, the general partner and the limited partner. The general partner is basically the individual or company that finds, manages, and operates the investment while also sourcing equity and debt and providing part of the capital necessary to carry out the project. And on the other hand, the limited partner is the individual or company that provides capital but does not intervene in the operation. So it's basically a passive investment for him. The great advantage of this strategy is that by having more capital pulling it from different investors, more profitable investments can be carried out. Essentially, when you purchase a 10-unit building, the price per unit will be lower than if you buy only one apartment. The same happens with renovation costs and many other things. The higher the volume, the greater the bargaining power and the lower the variable cost per unit. And now you may be thinking, what is the general partner's profit for carrying out all the work? Well, so this depends a lot on the operator. Some charge a fixed percentage at the beginning, others charge a percentage based on the return on investment obtained, and others charge through a hybrid format of a fixed and variable rate. At Emergent Investors, for example, we get most of our income by exceeding a hurdle rate, which means that the higher the return on investment obtained, the more money we earn. If for a certain project we put a hurdle rate of, let's say, 8%, it means that we get absolutely nothing if the returns on investment for the limited partner do not exceed that 8%. But then if the investment exceeds the hurdle rate, we will make a percentage of that exceeding return. We do it this way to gain trust and generate synergy with the limited partner, since the more money he earns, the more money we earn. What we want is simply to be a win-win for both of us, and the limited partner to continue trusting us for future investments. However, at Emergent Investors, for now, we only collaborate with trusted investors with whom we have synergies, since many projects require a long-term relationship. That is why most of our investors are actually long-standing clients with whom we have maintained a relationship over time. If you think you might be interested in investing with us, I invite you to fill out the form you will find in the description below. We will add you to our list of potential investors, and if at any time we think we can collaborate together, we will contact you.